So for businesses dealing with economic uncertainty, what would you say would be a good strategy to help keep cash flow steady for good profitability?
Economic times are uncertain, like this year. I mean, we have uncertain economic times. You have some industries doing well, some industries are not performing well at all. The solution is planning. Plan. Create a plan that you can track. Plan revenue by month. Plan what you want to do on an annual basis, and break it down on a monthly basis, depending on the type of industry you're in, whether you're seasonality or not. Figure all that stuff in, but you got to figure out what your targets are on a monthly basis for revenue, gross profit, overhead costs, and profitability. So you got to manage those things because you don't want to create losses. You want to be even in economic times, you want to be as profitable as you can be. That's number one. Number two is you got to manage your balance sheet in looking at your assets that are expanding. Making sure your receivables and inventory are in line. You don't want your receivables stretched out or your inventory getting too big for the number of turns that you're getting per year on your inventory. So profitability and managing your assets, because you want to conserve cash, and that's the only way you can conserve cash. If it goes the other way, if you don't manage for profitability and you start losing money, that sucks cash out of the business. And if you let assets and times of uncertainty, people don't pay as quickly as they do when things are really well. So things slow down. So are you watching how people pay? Are your receivables getting strung out? You can't let that happen. Or when there's levels of uncertainty, your vendors always want to sell you more. They're going to give you great deals to buy more stuff. Well, that costs money, and you can't do that. Then the last thing is you got to manage the liability side of your balance sheet so that your debt doesn't get out of hand. Most business owners should look at working capital, evaluate working capital on a monthly basis and compare it with the previous year. That's current assets less current liabilities. Evaluate the current ratio and evaluate debt to worth and debt service coverage and track those things. And are they improving or not improving? Are they stable? If they're starting to deteriorate, something's going wrong in your business. And you don't want that to happen in times of uncertainty because you don't know what the future is going to hold. You want to control it as much as you can. So it's about planning and controlling and watching your numbers. And again, your cash is in your balance sheet. Understand your balance sheet.